Hello, good evening, everyone. Sorry for the delay due to some technical difficulties. Hi, good evening, everyone. Welcome to our section for tonight. Sorry for starting late. All right, let's without further ado, that starts our section for tonight. All right, okay. So, yep. Oops. So, okay, let's go to the first page. Okay. All right. Okay. So good evening, everyone. My name is Elki. Welcome to our section today on safeguard on the topic safeguarding your portfolio amid current market turbulences. All right. Okay. So I believe everyone do feel that this year is quite a volatile year happening this year, whereby we have quite a number of hoo-ha and a lot more volatilities after the president, the U.S. president Trump, actually come come on to the sports. Okay, so with his on coming in as a president, he has introduced a lot of policy changes and also a lot creates a lot of uncertainties and also volatilities in these markets, whereby we do see that there is a need to readjust our portfolio and also our strategy accordingly. Okay, so we has entered coming into the 6th month of the year, and we can pretty much feel that this year is very different from last year, whereby last year we have been driven on a lot of catalysts and also the buying supports from data center constructions, some infrastructure orders. But this year things has been a little bit different from what we are seeing. Okay, so the purpose of this section today is try to share with you guys in this kind of situation what are the things that we should be looking at, and also what are the steps that we able to take into consideration to help you to either protect your portfolio and also help you to perform better in this timeline. All right, okay. So before I start, let me make a really brief introduction about ourselves. Okay, so my name is Elki. I've been in this industry since 2012, and together with iPac Online, which is also a online trading solution by Inter-Pacific Securities, we are actually doing a lot of client servicing, retail clientele servicing, and also helping a lot of our clients to optimize their performance. Okay, yeah. So Inter-Pacific Securities is a one-to-one, 1+1 broker. Okay, and we are also a subsidiary of Berjaya Corporation Berhad, which is listed on Bursa Malaysia. Okay, so yep. So before I start, this is the information that I'm sharing today is mainly for illustration and also investor education purposes. Okay, so if you find that any of this advice that you really wish to explore, really wish to know a little bit more, and put into applications, please do check with us, or check with your dealer or reminders accordingly before doing it. Okay, but hopefully today's section will able to give you a sense and idea on how to use some of these tactics or some of these tricks to help you to perform better. Okay, so what we're gonna go through is we can go through some of the overview of what's happening in the markets, and also explore why so many traders, investors are losing this year. I've come across, talked to quite a number of investors, traders. Many of them, they are complaining that this year hasn't been nice to them. They have been losing back some of the profits they have been making last year. And why is it happening? So we will be talking through some of the reason and also decipher why is that happening actually. Then we're gonna look into some of the rules, strategies, and also Q&A by the end of the sections. Okay, yep. So All right, so let us start really go into it, and let's start our section for today. Before that, if you can grab a pen or paper, okay, because we're gonna do a very short quiz right now. All right, okay. So if you have gotten a pen and paper, then we shall start it right now. Okay, just grab any pen or anything that you can just mark it down. Okay, so the very first, what I'm gonna do is I'm gonna have a six chart right over here, six counters, six stocks. Okay, and this is the charts of these six stocks, and you try to guess if you are looking at this chart at this moment. Okay, will you think that the chances of it hitting 10% upside is better, or it's coming to hit the 10% downside is better? Okay, which has a better chances of hitting? Okay, so if you have six, for example, 60,000 on hand, okay, for every 10,000 for these stocks, would you be buying or would you be doing short selling? Okay, let's assume that we're able to do the short selling uh without any restriction. No. Okay, so this is the first stocks. Okay, so at 95 cents, do you think that it will go to 1 ringgit 05 cents first, or it will go to 0.85 half first? Okay, then this is the second stocks. Okay, so this stocks has been coming down very sharply from 5 ringgit 20 cents to right now 3 ringgit 90 cents. Do you think that it will continue to go lower to hit the 3 ringgit 50 cents, or it will rebound to 4 ringgit 29 cents? All right, so you just write down, and very soon we're gonna have the answer. Okay, and how about this one? The third one. Okay, after staggering support at 84 85 cents, and right now it rebound to 94 cents. Do you think that it's gonna hit the 1 ring 04 first, or you come back to the support 84 or 85 cents? Okay, so basically this is where the price is, and this is the 10% higher and also 10% lower. Okay, number 4, how about this one? This one looks like a double bottom, right? Okay, so from 1.25 cents, do you think that it's gonna test the resistance earlier, or it's gonna hit the bottom first? Okay, so I'm just using 10% as a guideline, so whether it's gonna hit 10% higher or 10% lower. Okay, the fifth one, after the gap down and it cover gap, and even break out higher, do you think that it's gonna recover further, or it's gonna come down lower? Okay, so just based on your hunch, based on what you think, okay, just have a wild guess. Okay, and last but not least, okay, after it has been trading and supported at 8 ringgit, okay, so this one 10% is near to 9 ringgit, and also the low part is 7 ringgit 40 cents. Okay, so if you have already written down the six of your six guess, okay, so let's look at the answer. Okay, for number one, the number one just now, it was capital A, and at this point capital A wasn't able to trade higher to 1 ringgit, but it went lower. Okay, so did you get it right? Okay, so for those who guess that the price is going to go lower, then yes, you got it right. Okay, so you just tick that you got it right. Okay, and Sunway Construction is the second one that has been selling down from 5 ringgit 40 cents to 3 ringgit 90 cents, and unfortunately it came lower to hit the 3 ringgit 50 cents first before it rebound back above the 4 ringgit level. Okay, so for those who guess that coming further down, then you will be getting a yes. Okay, the third one is MYEG Services. Okay, so for MYEG Services, the buying continued to trade above the 1 ringgit. Okay, then only the selling down come in later in April this year. And number 4 is the double bottom one, is Top Glove. Okay, unfortunately the double bottom didn't successfully push it back to retest the top, but further selling down. Okay, and the fifth one is Greatech. Okay, the technology semiconductor company, and yep, it traded higher. Okay, from here. Okay, and number 6 is CIMB. Okay, so nope, not 9 ringgit, but it went lower below 8 ringgit. Okay, from here. All right, so out of the 6 guesses that you got, how many that you got it right? Did you get 4, 5, or even 6 correct, or you make less than half correct? Okay, so in fact, you can see that all these are some of the stocks, and these are not, all these stocks are not like uh alien to us. Okay, these are some of the popular counters, popular stocks companies that people have been actively trading in the markets. Okay, so you can see, if with this very simple exercise, if we are getting like 1, 2, or even just only 3 guess correct. Imagine that if you have been trading for the past 5 months, and this is how the market has been behaved for the past 5 months in 2025. Okay, in fact, many traders, they actually suffer from losses from this year market because it do not have a very clear direction, but posted a lot of uncertainties. Okay, so quote from Mike Wilson. He actually think that this first half of the year is going to be choppy, and yes, it is. And if we look at some of the overview and also some of the opinions that people has been sharing, like just recently, Jimmy Diamond, um, the CEO from JP Morgan's Chase, he actually, despite that US equities, our FBM KLCI, Asian markets has been rebounding and coming back near to the high, he actually don't agree that we are in a sweet spot. Okay, and some of these fund managers, some of these um, traders, okay, and some of the hedge fund managers, they are actually being a little bit more careful and not to say pessimistic, but they are really cautious, and also continue to stay conservative on the view. And some of them, they even are looking for news to get worse. Why is it so? It's because if we look into current situation, we have too many potential crisis, and also some of the all these events that might not support the growth in the economy, not not being helpful. And from there, we are seeing that our economy being is really shaky at this moment. Like what everyone has been discussing and also looking at, like, which is the global trade crisis, and that could trigger into stagflations that everyone has been discussing, and also even recessions might be hitting us. Okay, and geopolitical crisis that has been getting worsening, and also heightened tensions in Russia, Ukraine, or in Middle East. Okay, so these are all these things add up together that really creates a shaky economy, be well doing, and also that actually worry us. Even we are seeing the equities, the indexes are trading higher. Okay, yep. So how can we be ahead of the markets, or even identify what are the potential movements? Okay, yeah. So if there are a few indicators or even indications in the markets that is telling us that the volatile the uncertainty has increased, or even we should reduce our risky assets, is some of these indicators like VIX, okay, volatility index, okay. So you do want to monitor on VIX, whereby if you are seeing the VIX increasing, going higher, then this should be an indication to tell you that the uncertainties are building up, and also the markets are feeling uncomfortable with what's happening. Okay, so there might be major events coming due. there could be some worsening in some of the situations, okay, and that would cause the spikes in the VIX. Of course, you do not want to wait until like it really spikes, then only you act. But as it build up, as you are seeing the average of VIX is increasing, going higher, then you really want to relook at your portfolio and also do some adjustment accordingly. And what are the adjustments to be done? We will discuss shortly. Okay. Uh, okay. Beside VIX, safe haven assets like gold price, like yen, or Swiss franc. These are some of the assets that deemed to be the safe haven, deemed to be um, uh, defensive. Okay, as the uncertainties increase, we would see some of these safe haven assets or even commodity price to the price to increase. Okay, so these are another indication that we could look into it as well. Okay, and the last but not least will be the yield curve inversion, whereby the demand for the short term bonds, it will the yield, the short term yield, it will exit the long term yields, indicating the demands of it. Okay, yeah. So these are the three indicators that one could look into to identify whether the markets, is there any uncertainties that is building up in these markets, to give you a heads up. Okay, yeah, and amid this kind of this kind of environment, this kind of heightened uncertainties and risks in the markets, that actually create the environment, the build up for most of the traders are failing. Okay, yeah, one of the key reason is because many their trading strategies, their trading plan, it doesn't match with what's going on right now with the economy, with the markets. Okay, it's a mixed match plan whereby a lot of trading strategies, especially for Malaysia traders, they are cater for just bullish and also uptrend markets. Okay, so when we are going into a more choppier markets, or even weakening markets, imagine that you are still aggressively trading, pretending that it is still going on a bullish markets. Okay, so from there, a lot of all these traders has been caught, or even their risk management hasn't been well executed, and that brought us to the third point, which is the over leveraging. Okay, yes, leverage is a tools that actually able to amplify our gains when we are making the right calls, when we are right on the trend, and we okay, that actually become the double-edged sword that actually hurt us and damage our portfolio if it doesn't work as what we are planning. Okay, and last but not least, it will be many traders, they do not lay out their exit plans when they are entering. Okay, and even they might have some idea in their mind. Okay, when should I exit? When should I cut loss? It's not being well executed, especially if the trade is losing. Uh, yeah, many times when the trade is in profit, they might exit earlier. Okay, but when the trade is losing, they could really like not looking at the trades, detached from the trades. Okay, feel defeated, and when they realize that, okay, I really need to look at it and really need to do something, and usually that time the losses is like really painful and really significantly impact their portfolio or their total capital. Okay, so these are a few reasons that actually really hurts a lot of the traders in the markets really badly. Okay, this or this actually contributed to why a lot of all these traders are losing money. Okay, so today, to overcome this issue, to really like help you guys to safeguard your portfolio under this kind of environments, I think that we really I would like to share with you guys that this some of the rules and also some of the strategies that you guys might want to look into it. Okay. Yep. So hopefully, if any of all this, it really can helps you. Okay, then you might really want to you feel free to snapshot it, or you can play back later to really review and also pick up some of the points that able to help you. Okay. All right. So okay. Yep. Setting trading rules. Okay. So why do we need trading rules? Okay. Okay, why I need to do all these rules and stuff? Okay, trading it should be simple. You have been always say that keep the tradings simple and easy. Okay. So all these trading rules that we're gonna set right over here, it actually will help us to get in line with the markets. We know it will help us to keep the discipline, okay, so that we can make informed decisions. Okay, imagine that you hasn't been knowing what's happening into market, and suddenly you heard your friend A or friend B or this dato telling you that these stocks can buy and that, and then you just jump it. Okay, without knowing what's happening in the market and jumping in like just like that actually create a lot of risk and a lot of uncertainties to your portfolio. Okay, so by setting some of these trading rules, the very least is it can help you to know what's happening to the stocks, know what's happening in the markets, and also hopefully if you follow your trading approach, um, it can help you to make a better decisions, and also um, it can help you to mitigate some of all this impulse trading. All right, okay, especially the FOMO that everyone has been talking about, fear of missing out. Okay, yeah. So for the trading rules, I actually break it into three phases. Okay, in trading, we should put it into three phases, whereby um, pre-trading, which means before we buy any stocks, okay, and when we are buying the stocks, and also after we have exited the position. So okay, so pre-trading is our rules is we need to do our pre-market analysis. Okay, so if you are taking your investments, your trades, your every single purchase as a business, you are putting your money into this company, into this business, don't you think that you want to really analyze their markets, or the very least analyze how have the price on this company has been moving, if you just engage it technically. Okay, and don't you want to know, and don't you want to define how long are you planning to hold on for this investment? Define your trading horizons. Okay, and last but not least is identify your stop loss when you will be wrong. Every traders, every investors will have their moment of making a wrong call, but it doesn't matter. The what is more importantly is we need to have a stop loss to tell us that yeah, I'm wrong. I really don't want to engage this anymore, and I want to just get back my money. Okay, I recognize the loss, and so be it. I get back the money so that I have my capital to put into the next opportunity. Okay. Yep. So if I'm saying that if we expect that we are not making any mistakes, not making any losses in all our trades, that would be crazy, right? Okay. And of course, we need to ensure that the trades that we're gonna make, it's in line with our portfolio allocations. So this on all these topics, we're gonna go through it shortly. Okay. And when you're holding a position, actually it's very simple. There's nothing too much to do, because all the works basically, most of the works are before you entering the trade. Okay, those are where the hard work should be. Okay, but unfortunately, what happened to most of traders is before they buy, they heard what they do is they heard the news, they buy it, then only they start doing all the homework. Okay, No. Okay, so we should do all this during the pre-trading phase, and when it comes to uh, the trading phase, what we need to do is we just need to follow our rules, follow our trading plans, and if we're gonna take profits, we're gonna take profit. If we're gonna cut, we're gonna cut. Okay, and what matter the most is we have to keep updating and keep reviewing on what's happening to our stocks at least once a day on daily basis. It can be during the midday, during your lunchtime, or during after the end of the better not the end of the day lah, because the end of the day then you got nothing to do anymore, nothing you can do. Okay, so at least during your lunchtime, spend 5 to 10 minutes to look into it. Okay, so if you are putting in 100,000 or 200,000 portfolio, don't tell me that this 200,000 doesn't worth your 5 minutes of looking through your portfolio, how it behave, or where it go. Or if it's just a 10,000 or 15,000 value of trades, don't tell me that this 15,000 doesn't worth your 5 minutes. Okay, yeah, just spend 5 minutes to look through. At least you know that, oh, it's up or it's down. Oh wow, how come it dropped so much? It's near to my stop loss. Okay, so I should prepare cutting loss, all this. Or even ring a LK, or any of my dealers, Dexter, Hong, or okay, it's coming near to my stop loss already. If it's his stop loss, let me know. Okay, our dealers are more than uh, welcome to help you. Okay, to highlight to you if you're busy with your work. Okay, yeah. So, and that's one more important thing to do when you are trading or holding the position. Is every day sembayang or pray to your ancestor. Hey, please go up, please go up. Okay, all right. Pray and hope. Okay. So after you have exits, that doesn't mark the end. Okay, we do really want to review whether we are acting accordingly or not. Did we exit the trades following our plan, or did we cut following our plan? Or if we are not, if we drag and we really cut much lower, then we have to really record it out and ask ourselves why is this so and how to prevent that from happening again. Then we prepare for the next opportunity, next engagement. Okay, I do believe many of you right here that willing to spend your nights with me together today. You are not planning to just trade one trade and gao tim and sao gong, right? Uh, no one in these markets, you can just do one trade and that's it. Especially if you're winning. Imagine if for your first trade, okay, beginner's luck, you make a 50% return from the first trades. uh, Impossible you're not going to come back in and hope for the second trade that help you to win at least 20-50% again. Okay, so it will never be one trade. Okay, usually people quit trading because they lose really a lot, really too painful. But after some time, after they forgot the pain, then they will come back again, trying to revenge, take a revenge on the markets, trying to prove themselves they are actually able to do it fine. Okay, yeah, so these are the three phases that we can break it down, okay, and do accordingly. Okay, so we're gonna focus a lot on pre-market analysis because these are the part that we're gonna do a lot of homework. Okay, so so right over here, I'm gonna share with you a method to help you to do a pre-market analysis, at least to help you to identify that where is the trend, okay, and using different move these tools that I'm gonna introduce you guys is moving average, okay, which it can tell you where is the trend, and also it is a very simple tools to engage. Okay, so if you think that you're gonna engage the market in a shorter manner, then you want to use 9 days and 20 days moving average. If you are doing on a midterm, then it will be 50 and 100 days. Or if you're thinking that you're gonna do a long term trades, then it will be 200 days. Okay, a very simple rules right over here is you only buy if the price above moving average, and you only sell when the price is below moving average. Okay, because by doing so, by applying this MA and also following these rules, it will actually help you to always trade in line with the trend. And also, before you entering the position, you already kind of know where your trading time horizons, whether you're doing short term, whether your expectations should follow the short term expectations, and also using the rules of the moving average, it can help you to set a stop loss before you entering the positions. Okay, yeah. So by just using one tool, it actually can help you to achieve and accomplish all these criteria that we have discussed earlier. All right. Okay. So some of the example on how to use the moving average. Okay, that I'm gonna share with you right over here. I'm gonna use Gamuda as an example. Okay. So for short term execution, short term trading approach using moving average. This blue line right over here is 20 days moving average, and how you can engage is when after you see the price is trading above the moving average, you just wait the price to come back, touch the moving average, and bounce. Okay, so every arrow right here, okay, up arrow right here is actually when it come back to the moving average near and bounce. Okay, touch, bounce, touch, bounce, touch, bounce, and that is where you enter and buy. Okay, so these are the approach that you go in when it's going on an uptrend. It helps you to trade along with the trends. Okay, because the it's not to say that we cannot trade against the trend, but it will be easier to trade along with the trend, because when everyone is buying, when the fund is coming in, the money flow is coming to push it up, and you follow the trend, follow where the money flow is, then it's easy for you to make the money. Okay. Similarly, if the price trade below the moving average, okay, then that is where you really don't want to buy, or if you have position, you do really want to consider to reduce exposure or even cut and exit the positions. Okay, yeah. So if you can see from right here, if you buy and if you never exit, it will went up more than 10% before it's coming down. Okay, yeah. So if you are seeing that chop up, chop down like this, come down and go back up, come down, go back up like this, then this is the signal that it's choppy and going nowhere. All right. Okay. So for midterm buying, okay, midterm is a little bit different, whereby if we are looking for the sit back, yes, we can definitely still look for the sit back, like right over here. Okay, this arrow. Okay. But we also want to engage if the price, once the price cross above the moving average. Okay, yeah, because the midterm, when it cross, it might go into a strong uptrend, and then you might miss it. So when it cross above the moving average, like this line that I'm using is 100 moving average, then you might really want to close eye and buy some already. Okay, if you want to actively in out, then you might want to refer to the 20 days moving average with short term, and then every time it bounces, then you add on some small positions. Okay, yeah. So so you can see the cross is right over here at somewhere around at 2 ringgit 20 cents, and then the first selling down below is at 4 ringgit and 20 cents. That almost 100% up in a strong uptrend for Gamuda last year. Okay, but like what we're seeing right here, the things get choppier. Okay, when it entered 2025, okay, it's, you can see it sell down and immediately it try to rebound back above the moving average. So if you are buying on the cross, okay, yes, we can buy, but once it sell down back immediately, we really want to cut loss. Okay, because if you don't cut right over here, you wait, you might cut here, or even you might cut much lower. Okay, yeah, because things get choppier, and once you get in and out, got cut loss once, then you might really want to think twice if you want to still engaging the markets, or just let the markets go by itself and take a break until it's able to stabilize. Okay, yeah. So right over here, Right now we are seeing more trading above the moving average. Then we might want to see look for the sit back and rebound. Okay, so right over here we can see a sit back and rebound, but it's still another cut loss. Okay, yeah. As for a longer term buy, like using 200 days moving average, then similarly, the bounce and the cross above the moving average, those are the buy signal. Okay, yeah, so you can see it just hold well at the 200 days moving average. Okay, and this is the crossing down, telling us that's the weakness. Okay, yeah, all right. Okay, so this method, it will help you to identify that when is the entry following the horizon that you wish to have. Okay, help you to define your trading horizon, and also help you to have a consistent method of entering and exits, and also identify the trend of the market, whether it's going on sideways choppy or it's going on uptrends. Okay, and it's really important to have all the rules so that you can really know when you should be trading, or more importantly, when not to trade. Okay, like what we are seeing for moving average, why when the moving average line is flatter, and the price is going up and down of the moving average line, it's telling us that it's choppy, and we really might want to stay out at that moment until things getting more stabilized, bounce and supported above the moving average line, then only we get in again. Okay, so that tells us how to get in and how do we exit to take profit or even to stop loss. Okay, yeah. So throughout my all these years in trading the markets, more than 10 years experience in the stock equities, I do really realize that one thing that is very important is when everyone come into these markets, they always have been focusing how can I make the big bucks, make the big profits from these markets. But I would say that when you are coming into these markets to be consistently profitable, we should really focus. What we should really focus is, we really want to focus on how we are not losing big. Okay, losing is part of the game. Okay, but not losing big. Okay, because imagine if you're putting a 100K starting capital, and in one trade you lose 50,000, you lose half of your capital. In order for you to recover it back to 100K, okay, with the remaining 50K, you need to make one trade which can give you 100% returns. Okay, so losing a 50%, it requires double effort to recover it back. Okay, but if you are, for this 100K for the first trade, if you're just losing like 2,000, 3,000, okay, you have 97,000 to work it out to cover the 3,000 that you lost. Okay, so losing small is fine. Okay, but of course, not every day every trade you are losing smaller. So if you keep on losing for more than 3-4 trades, then you really want to review whether your execution methods, whether your timing is it wrong or not. Okay, so all these small losses, it should tell you that what actually went wrong. Okay, but not make sure that you're not losing more than a certain percentage, a significant percentage of your portfolio. Okay, and and last but not least, we will be the three parts to be consistently successful in this business will be methods, mindset, and also money portfolio management. Okay, so the very last part of our section today, we will be looking into portfolio allocations. Okay, so as another key part to control and also um, to help us to perform better in current choppier market trends. Okay, yeah. So similarly, when it comes to portfolio allocation, portfolio management, the very first thing that we really need to emphasize and also focus is always the risk management first, rather than the profits. Okay, why we need to have a portfolio management is because The very main reason is because we really want to diversify our risk. We don't want to put all the eggs into one basket. But of course, this doesn't apply to everyone's. Okay, so if you are very beginner, or if you are sorry, not to say you are very beginner, if you are starting with a very small capital, for example, like just 5,000 or 10,000, it doesn't mean that you cannot trade. Okay, personally, I started young as well. Okay, I started with a very small capital, and with a small capital, portfolio diversifications, it might doesn't work. Okay, it might doesn't work. Okay, unless you are committing to put in certain funds on a consistent basis, like every month you're committing this kind of funds into it. It doesn't need, it doesn't need to be a lot. Maybe like another 1,000, 2,000 every month. You save up from your salary, all this thing you're putting in. Then yes, we can have a very simple portfolio diversification, whereby some part is for this so-called savings on the high dividend yield part. Okay, whereby another part for your some capital is more on the rotational or aggressive part to grow the money. Okay, because the capital is much smaller. Okay, but for those that who are committing maybe like 100,000, 200,000, all this, you really want to break it down, your portfolio into a few parts. Like for example, we really want to always keep some cash. Like for a good percentage, it will be 20 to even 30%. Okay, many of them, they will be saying, "Hey, okay, you crazy? Keeping so much cash in my portfolio, putting there, doing nothing." And although keeping with Inter-Pacific, you do get some interest back on, regardless any amount that you keep in the trust. We are giving you 2% per annum. Okay, but 2%, for some, they might think that 2% is too little. I better put in FD or put in anywhere else. Yeah, you can do it, but as long you're keeping the cash, if you think that you're gonna allocate 100,000 for investments, then you can just put 20K in your FD, and or some current account that give you a better interest, or you can keep with us also lah, get the 2%. Okay, and also be prepared for any opportunity to come. Okay, but another 80% or 70 to 80%, then you might really want to break it into some of these, like high dividend yield counters and some defensive large cap counters, to secure your money. At least you're getting into some of these counters. Okay, that if giving you a consistent cash flow returns. All right, okay, and it doesn't mean that it has to be always uh, in it has to be always in the so-called the stock mode. It has to be always invested. Okay, so if you think that, let's say you have 25% on large cap, but the share price has been high, you can always dispose it. You can always sell it and take some profits and keep it into as cash first, until you see some of the cheap valuations, large cap or defensive counter. Then you move from the money from the cash to buy back into this portion again. Okay, but at least is you need to keep around like 50% on the high dividends and also a large cap, so that your portfolio is more secure and stable. Okay, and another 30% right over here, then these are the part that we gonna use it to fight. Okay, on some of the rotational thematic trading, which might able to give 50, 100% returns if it has been a good year. Okay, and also when we are going to rotational thematic play, it doesn't mean that the large cap that we are buying, it's come in line with that thematic as well. Okay, so for example, last year Gamuda could be one of my large cap pick. Gamuda, Sunway, Suncon, those are large cap, good one, and it come in line with the rotational as well. But meanwhile, I also can have some of the smaller one that trade along with the rotational theme as well. Okay, so by doing so, my portfolio breakdown, it can still follow this allocation. Sorry, but my overall portfolio industry and sector, it could be heavily on a certain sector or a certain industry. Okay, okay, and of course the very last is we can also keep a very small portion like 5%. Okay, just for an exposure on ETF and also structured warrant as a hedging tools, or even an amplifying amplifying tools that help us to boost up our return. So what does it mean? Okay, so I'm gonna put up a very simple case study to share with you all. Okay, so one of the scenario is bubble watch. Okay, imagine that markets come to a bubble and or even coming to high. Okay, so some of this chart pattern, it could be telling us that the market is forming a top, or technical indicators like RSI, stochastic, or even price volume divergence, MACD divergence. All these are the tools that can tell us that the market could be hitting a high. It can be applicable on the short term or even a bigger picture. Okay, so if you want to know a little bit more on this chart pattern, because today we're not gonna dwell in depth into all these topics. Okay, but you can join our next webinar next month. Okay, on June 17th. Hopefully by that time I won't have all these technical difficulties again. Okay, the speaker is me as well. Okay, we're gonna dual deep and also identify and also talk about how to utilize all these chart patterns to help you to have a better trading returns. Okay, so if you're interested, you can print screen this picture or even scan this QR code right now to register for our next section. Okay, so I'm gonna put a minute right over here and take some water. Okay, yeah. So it's another Tuesday. It's a Tuesday in June. Okay, so we're gonna look through some of the chart patterns and at 8 to 9 p.m. as well. All right. Okay. So if you miss it and if you want to find it and register, you can always find our websites as well. Yep. Okay, and at our Facebook page. Okay, so back to the bubble watch. So for example, like recently, okay, FBM KLCI has rebounded more than 13% in a month. And if you are concerned that the market, suddenly the market rebounded more than 30%, 13% from the low, and it could be at the high side. But the rebound, it actually comes with the things getting rosier. Things are seems like settling down, but still you are afraid that this could be a bubble. Okay, you might really want to hedge. You might interested to hedging your positions, or even have a short-term bearish view. So what are the things that you could do? Okay, okay. So this is the FMKLCI that happens in these 2 months. Okay, we can see after selling down on the tariff, and then we have rebounded all the way more than 13% up. Okay, and this formed into a rising wedge formations. Okay, yeah. So some of the strategy that we can do is, if you are holding position at that time, what you can do, one is you can always exit and re-enter. Okay, you can always think that you want to look through your portfolio and identify some of these stocks that has actually overbought using like what we talked just now, like RSI, like stochastics, like price volume divergence, MACD divergence. Okay, but do bear in mind that uh, the weakness of stochastic and RSI overbought is if the stocks is trading at a very strong uptrend, the indicator can stay overbought over a long time. Okay, so you cannot see that once it go into overbought, then you exit. Okay, but if you are seeing it's at the overbought, it shows the volume also coming down, but the price still going up. That's also that coupled with the price volume divergence, then you might really want to reduce some of your exposure. Okay, and from there, if it's really come back down and traded like maybe drop 10 or 15% from the high, then you might want to buy back, and from there you're actually making an additional 10 to 15%. Okay, but if you think that this is a very good stocks, you really don't want to sell it because you're really afraid that it's a very strong trend, it can go 50 100% higher on these stocks with the potentials. Okay, then what another thing that you can do is the hedging part, which is the 5 to 7% that we can use in our portfolio. Okay, so this is a tools that I would see that um, could help us to perform better when the market is choppier or even swing up and down or even in the bearish markets. Okay, so we can actually initiate and look into some of the put warrant to hedge on our portfolio. So if the price continue to trade higher, okay, if this 1 2 3 good stocks continue to trade higher, but the overall markets index came lower because of the environment is have been overbought, the things has been too overly high, okay, and it came lower, then you might able to make money both sides. Otherwise, if it continue to come lower, then you can both come lower, at least you have your put warrant to cover some of your losses. Okay, so structural warrant is a tool that we can look into it and um, help us to hedge during a bearish market. Okay, and some of the point that we really want to remember when we are engaging with structural warrant is only for short-term engagement. Yeah, it's not something that you want to hold for too long until expiry, because upon expiry it will be cash settled, and if it's out of the money, then the whole thing is actually burnt. Okay, especially when it comes to the very last month of the before the expiry, due to the time decay, the value of the structural warrant can drop drastically. Okay, especially if it's far from the exercise price or very out of the money. Okay, so these are the things that we really want to be aware of if we are using structural warrants to complement our to help our portfolio. Okay, yeah. So one of the case study that my friend, not me, okay, my friends, okay, my clients, okay. So we have talked about this idea, and he picked it up, and he actually did this. Okay, not me. Okay. So with the recent softening turns in the Trump trade plan, so the market seems like it's despite softening tones, the market seems like hitting high and then start coming down. Okay, so seeing potential retracement, or even he want to hedge after he makes quite some gain in his stocks. He actually bought into this put warrant FBMKLC HB2, okay, at 9 cents. Okay, but of course he's buying a very small position, okay, so that because we have discussed, we also have agreed that the hedging part, it shouldn't be too big, it should be a very small part to help your position when at least when the market is coming down, it helped to cushion some of the losses, or the decline in your profits. Okay, so on the 13th of May, he bought in 9 cents. Okay, yeah, so this is what happened on the 13th. Okay, on the 13th of May, it's actually a very strong green candle. Okay, but at that time, this client, he actually read that the market has overly done on the buy sides, and in fact, instead of taking profits on his stocks, some of the stocks like Suncon or others, okay, he decided to initiate a put warrant to as a tool to hedge his long position, also acting like he's taking some of the profits from the markets. Okay, yeah, without actually taking profits on his position, he initiate a put warrant. Okay, so from 13 until today, what we can see is from 1580 area, the index actually went more than 50 points lower. Okay, more than 50 points lower, down about like more than 3% from the high until the closing of today. Okay, so that's a 3% down from where he bought the put warrant. Guess what happened to his put warrants? Okay, so this is FBM KLC HP2, whereby he bought at 9 cents. On the next day, it actually went to lowest 8 cents. Okay, whether he buy some more or not, then I don't know. That's why I never ask her. Okay, but from that time where for this contract that he bought on 13 May, from that time until today, from 9 cents, it actually today closing is at 70 cents, 17 cents. Okay, and that actually the value actually went up more than 80%. Okay, so this is what we are talking about. Okay, using a very small portion in your portfolio to engage with some of these hedging tools that have the impact on leveraging high leverage products that actually help you to uh, help you to hedge some of the losses, and also if you're right, it actually amplify your gains in the markets. Okay, not only that you have to do put warrant, but if you're seeing the market is bullish, you can also use the very small portion of the portfolio to buy into some of the call warrants. Okay, it can be the company call warrants, it can be the index call warrants. Okay, but of course it really need you to like study what is call warrant, what a strategy, how to pick a correct call warrants, and all this. Okay, and all this, we can do it in our following section. So if you're interested in understanding more about call warrants, all this, do feel free to drop us message or WhatsApp us, or even uh, putting in the comments, so that we do acknowledge that there is a demand for all this. Then we're gonna have a section to run it in near future. Okay, but this is how he actually used the very small position in the call warrant, help him to cushion some of the um, declining profits or some of the losses that he experienced from the stocks, from his positions. Okay, but last but not least, okay, please be cautious when you are engaging with all these high leverage tools or these products, whereby, like I said, we really always want to keep a very small exposure in our portfolio. The very least is keep it always less than 50%, so that your it does so that your portfolio is more stable, and keep it short term. If you are wrong, just get rid of it. Okay, get back the money and relook it. Okay, so that's also the reason why we always want to keep the exposure small, because if we are wrong, we can always cut it off. Okay, without too too big emotional baggage. Okay, yeah, because if you are wrong, for example, just now the 9 cents, it went to 8 cents. That is already a more than 10% drop already in the percentage wise. Okay, yeah. All right. So, in summary for today, the key point that we are looking at it, that we covered, basically are the 3M, which is the methodology, money management, and also the mindsets. Okay, so I have put down some of the key points that we have been talking about, like find a methods to tell you when and how to act, especially in this kind of market, so that it can really safeguard your portfolio, as especially when not to act. Okay, not to just go in and buy. Okay, and the money management parts. Okay, always keep some of the cash in your portfolio. Review your portfolio. Okay, review your portfolio and make sure that you have some cash in your portfolio, so that you can always be prepared for anything unexpected. Okay, in current markets, anytime we might have some black swan incidents, and that would be the time that you really need cash, and also help you to get some cheaper shares, or even help you to go get through your difficulties in your real life. Okay, and last but not least is keeping the right mindset, which is protect capital should be the prime targets for this year. Okay, rather than making very good profits. Protect capital, try to be positive, try to keep the year in positive, try to engage the markets following the rules and consistently. Once you're able to do all this and practice all this, I believe this year 2025 is still be a good year for you. All right, okay, so that will mark the end of our section today. And if you need more information, or you need any of the slides, or some of the anything over here, or register for our upcoming webinars, do feel free to contact us, contact our dealing team. And if you have any questions, you can feel free to drop in under the comment, and we will attend to it. Okay, yeah. So, and also, I'm really sorry that we have delayed 15 minutes on the starting. Okay, some technical issues happens, and yeah, things happens. All right. Okay. So if there's no questions, then I shall end our section for today. And if you have further questions and not getting any reply, do feel free to WhatsApp us. We have our number right over here. Or you can always drop us a message on our Facebook, or even IG. All right. Okay. Good luck trading, everyone, and I wish you guys a very good night. Thank you very much. Bye bye.